As expected, the Fed cut rates again. They suggest that this was the last time for now. They really promise. The stock market applauded their actions, giving the necessary cheap money to continue this fraud. Come December, if trade negotiations continue to stall and give false hope into 2020 as expected, the market can roar higher as the currency continues to depreciate. At this point, the Fed has cut rates 3 times in 2019, bringing them down to near historic lows from already extremely low levels, kept trillions on their balance sheet, committed to adding more to the balance sheet, and has been actively intervening in the markets on a daily basis to keep everything moving. But yeah, best economy ever. You came here for the truth, so let me unveil that for you. This is the reality of the situation that we are in today. Their actions on the back end are saying one thing, and then they come out in their statements. You see the markets, completely different thing. Of course, this happens every single time. We see it all throughout in history, and people get fooled every single time. The 401ks, the pension funds, they are already in trouble in so many cases, particularly with these pension funds, and they will be decimated. We will see slashing going on across the board, and a lot of people are going to be pissed off. And what are they going to do? They're going to go back to the people who created the problem in the first place and demand that they get what's coming to them, and they're going to be left empty-handed. And then we're going to hear the rumble of the heels of the angry mobs, and this is not going to end well. I'm going to show you what's going on related to the Federal Reserve. The central banks are basically all going in the same direction. I wanted to give you some of the details. Obviously, I'm sure you've been paying attention to everything that's in the news. You know that the Fed cut rates. I'm not going to bore you too much with those simple details. I watched the entire conference, the question and answer, everything that was happening. I brought it all into this one video. Let's get into it. Powell aces tricky Fed transition to ending interest rate cuts, doing, quote, 100% the right things. That's right, cutting rate 3 times, not 2 times, not 4 times, not increasing, not holding. 3 times was the perfect number. That's right, that's according to BlackRock. But of course, this is what the market believes. 3 times, that was the charm. That was perfect, absolutely perfect. And we're going to see how perfect it is come December, because if we see that the market is rising, the S&P is at, let's say, 3,300. We see employment doing so well. The U3 unemployment rate is at -1%. Why not? And then they cut again. Clearly, we're not on the same page. But maybe they go past that, and into 2020, we see the next meeting. And of course, the S&P even higher. Will they cut rates? They don't suggest that what happens in the stock market has any sort of implication in what they do with their policy. At least that's what they suggest. It's just really funny to see their statements as they make them, look at the question and answer, and try to make sense of all of it compared to their actual actions on a daily basis. Very, very unusual. Here you can see the market's reaction to it. Clearly, they loved what they saw. Initially, it dipped down. We'll talk about that in a second. But essentially, they loved the fact that there was a decrease in the Fed funds rate, making easy money even easier. This right here is the federalreserve.gov. If you want to read the actual statement itself, this is it right here. I quoted from it in my community or blog section on the channel. If you don't check that, by the way, you definitely should. It will pop up in your news feed. If you're not seeing it there, you can go to my channel. I post almost every single day. I only post when it's relevant. I don't just do a daily post like you see so many entrepreneur channels do. They have everything all scheduled out probably for a month or 2, who knows. That's not what I do. I bring you information as I feel it is necessary. Maybe sometimes it's not something that I include in the video, so definitely check it out. The wording in here was almost identical except for the line where it said ready to act as appropriate in order to continue the expansion, something to that effect. And now they're basically just suggesting that at this point they're going to stay put and see what happens. This is what they had said a little while back, kind of suggesting that this would be the case. Other people had said that they weren't going to cut this time, but they would cut in December. Ultimately, this is where we are today. S&P 500 closes at a record as the Fed signals no rate hikes until inflation rises significantly. This is one of the points that they made, and during the question and answer, in my opinion, you're going to get more information than from the actual statement, because the actual statement, if you want to know what's going to happen in December, unless something wild changes, it's almost identical. Word for word, you can go through it, and they change little words here and there. Fed Chair Jerome Powell says current monetary policy stance likely to remain appropriate. And he was really adamant about this word appropriate, saying that where they are today is the right level. We've heard that many times before. We heard the same thing back in 2018, at the end of 2018, but clearly they changed their mind in a hurry. Fed cuts interest rates, but indicates a pause is ahead. I wanted to make that very clear, because what we can see with what the Federal Reserve does ultimately is, according to them, they act on the data that they see at that given moment. However, they seem to be leaving out a lot of information. That's the way it is. Right now, interest rates are at 1.5 to 1.75%. Meanwhile, we've got some serious issues. Look at what I was referring to in the introduction. Is none of that a concern to anybody? It's a little bit ridiculous. Now, if you want to see exactly what changed in the new Fed statement, CNBC provides this literally minutes after the statement is published. So you can look through it here, and anywhere that they have red, that's basically a change that they have made. And you can see mostly there's not red writing at all. And ultimately, they got rid of that one line. That was what was expected of them, so on and so forth. Repo operations are still going on. I think this is extremely critical. And even though, again, he brushed off what had happened, just like during the last statement that he made, he put him up in front of that microphone, and there he was trying to explain himself, trying to suggest to everybody that it's not to worry, everything is under control, it's going to be a few days. Here we are, well over a month later, the problem's still happening. They have to actively intervene in the market on a daily basis in order to keep it moving. That's not a good sign, okay? If you had to pour Drano down your pipes every single day, do you think that's a sign of good plumbing? Think about that. It's exactly the same way. Every day you wake up in the morning, if you want to be able to use your sink, you got to pour some Drano down there in order to keep it moving. I don't know about your plumbing, but it shouldn't really be working that way. Take a look at this. Aggregate volume of bets on US ZIRP or NIRP. We're talking about zero interest rate policy or negative interest rate policy. Ultimately, there are more bets being made on this as time goes on. So we're heading into that direction. There's no doubt about it. They're going all the way to zero. They're already at 1.5 to 1.75. A few more cuts and they are there. If we see the increased tensions, if we get some sort of event, maybe it's the no Brexit, maybe it's Brexit, maybe it's going to come from the US and China, maybe it's going to come from Russia, maybe it's going to come from Australia, nobody knows, but we can see that there are tensions all around the world, and any of this could result in a global economic collapse. And even if you believe that somehow the Fed will be insulated from all of that, if Europe and Japan and China and everybody's looking weak, every domino falls. That's the way it works. Now, one country is always going to do better than another. There are only variances here, but the point remains the same, is that every domino falls. We are all interconnected into each other. Everybody's financial system is completely intertwined. And the people who don't understand that, I assure you, ignorance is not bliss. Now, I thought this was interesting because we're talking about the issues going on between China and the US, and you can see the Treasury Secretary, I'm not allowed to say his name anymore, received a few complaints about the way I pronounce his name, says that agricultural sales to China will, quote, take time to scale up to 40 to 50 billion. Wow, how interesting is that? They put out a number suggesting that China is going to buy $50 billion worth of agriculture. And then they had one question, and that was, wait a second, is this even possible? Is it going to be a reality where China's going to buy $50 billion of agriculture? Oh, well, not right now, but it's going to take some time. It's funny the way that they do this. They can state any number, but that 50 billion will be the one that they quote forever. Even if this never happens, they can pretend as if it did, and the media will publish it. That's how stupid they think you are. The U.S. Treasury Department is exploring a 50-year bond for the first time. I just wanted to introduce this here. I mentioned it once before. They were thinking about a 50-year, 100-year. Now the 50 years being talked about. It is very early. I don't like to report on things that are necessarily limited in details and so on. I just wanted you to look at this, understand it, and know that we're going in this direction. There's no doubt about it. Why not a 100-year bond? Why not a 1,000-year bond? Why not? It seems a little bit ridiculous, I realize that. However, it's all funny money anyway. Why not? And then we have this. US GDP rose a better than expected 1.9% in third quarter as consumers continued to spend. You know, it's really funny the way that this works. See, because all of these are based on expectations. So if you just lower the bar, suddenly it's really easy to climb on over. You don't even have to hop. Just put it right on the ground and I'll walk over it. It's ridiculous the way that this works. But that's the system we live in today. Financial crisis happens. They institute some new rules, new regulations to make it more stringent, to try and prevent the crisis from happening again. They repeal those parts of it, and then they don't even have to do so. In this case here, I just brought up, what was it, yesterday, the day before, how the Treasury Secretary said how JP Morgan is working with the government to advise them on how this should be done in order to make them extend themselves a little further when necessary. That's right, always the same patterns over and over again. But don't worry, because the stock market's gonna go higher and higher and higher. That's all for this video. If you found that informative, hit that thumbs up button, smash that button because it supports me. I do appreciate it very much. If you want to learn how to build a business, how to make money, how to learn the system of Amazon and not have to pay anything, then this course is for you. It is a step-by-step guide for Amazon, and you can check it out at the Amazon GPS. If you want to learn about the financial system, about the central banks, about the currencies, about what's going on between the US and China, I have a lot of information in these two books. You can check them out at the link in the description. If you want the audiobook, that's available at themoneygps.com. Whoa, hold on, don't go anywhere. Have you seen this video? So important. It is very crucial. And if you haven't, click on it and I will see you there.